Good morning. Welcome to the trade setup. Sorry, extreme apologies. We are starting off very late, but nevertheless, let's start off with what promises to be a very, very heavy day in terms of trading because of news. So first, the markets are okay. US markets didn't do too much, which is also not bad. You don't want too many gyrations. Yes, they're not showing a sparkling. They didn't really do a big uptick, but they did okay in trade. That's the point. So that is one. And if you just look at what Asia or SGX Nifty is doing, it suggests a sedate start. So the SGX Nifty marginally higher. We'll change this now. Starting today, we'll try and get you this website to give you the live rate as things stand. So it's a flattish kind of a start that is anticipated, but no problems. The reason why I'm jumping very, very quickly is because one, of course, there's just a ton of stocks to cover today, and therefore maybe bottom up activity would be the real key thing to watch out for. So firstly, the trade setup. Well, I think the Nifty stuck in this middle of a tight range, right? Very difficult to predict directional moves in the current circumstances. So I don't think I'm trying to do that. I don't think I'm going to do that, and I don't think you should really follow too many directional moves as things stand right now. It's a range. It kind of contracts from a high level, expands at a lower level. Banks and commodity stocks are probably the ones which are most insulated from margin pressures, but they are also now starting to become a bit overweight. I still believe that if there is a rally, banks have to lead that rally. But let's wait and watch. Commodity stocks, I've heard a bunch of people off late. In my conversations that you hear on Talking Point, there's so many experts who are saying they're getting off the train of the commodity stocks. So remains to be seen. To my mind, what stays in focus in the very near term, today, tomorrow, the next 3, 4, 5 days, two-wheeler stocks, arguably because this month's numbers could be very strong because of, I think what a lot of people said is also a marriage season, and therefore two-wheeler stocks in rural India become a big thing. And somehow I believe that a low base also aids the two-wheeler company growth. So that media stocks, arguably because of the TV18 deal that I'll talk about, enterprise and ER&D stocks. So while pure tech is not quite doing all that well, but you saw what happened to KPIT Tech. We've seen what's happened to Tata Elxsi in terms of numbers, not that bad. LTTS was also okay. So somehow this ER&D stocks seem to be doing okay. And watch out for petroleum stocks by virtue of what Chennai Petro has done. Both Chennai Petro, MRPL, some of the related companies could all be in focus. So that's the, be bottom up, sector wide things could do well in that particular space, and individual stocks are leading the way. So do watch out for all of those. Have to bear in mind that dollar index is trading at 5-year highs, and that's a bit of a negative for the market as well. But like I said, ignore the larger market. Stock specific is the way to be. Key earnings today include an Axis and SBI Life on the Nifty, as well as Biocon, which probably will turn out a good set of numbers, I would suspect. Ambuja and All Eyes will be out there, whether there is a deal that is announced or not announced. Sterlite Tech, where virtue of the recent announcements that the company's done, and Lotus Labs, a much sought after counter, will they live up to their EBITDA margin expansion talk? The problem with Lotus Labs is that the management has spoken a lot of times about this aspirational target, about the margins, so they now need to deliver, and if they don't deliver, then the stock might actually take a bit of a beating, and rightly so. So keep all of these at the back of your mind. Those are the earnings today. Flows, FIs continue to sell 4,000 odd crores, and if Mahesh Nandurkar, who spoke to us yesterday, if I'm not wrong, is to be believed, then he won't be surprised if this $3-4 billion of selling continues from their FI side. But like I said, today is a stock specific day, and I'll spend some time there. So first, Bajaj Auto, Q4 numbers. Revenues fell 7.23% at about 7,974 crores versus 8,596 crores. Now, unfortunately, I've not mentioned out what we've not mentioned out here are the Bloomberg estimates, but it's important to point out the estimates versus the actuals. So the revenue may have fallen 7.23%, but it is higher than the Bloomberg estimates of 7,621 crores. And therefore, the revenue numbers are higher. EBITDA has fallen 10.6% at 1,360, but the Bloomberg estimate was 1,124 crores, and therefore it's higher than estimates. EBITDA margin at 17%. The Bloomberg estimate was 14.75%, very strong compared to estimates. And net profit, 1,526, the Bloomberg estimates were 1,203 crores. That's the crux of the beat that Bajaj Auto has done. So actually ignore my plate completely. The estimated numbers were much lower. It has come in much higher than estimated, and that is the crux for Bajaj Auto, which is why the stock may actually do well in the session today. The BOFA note on Bajaj Auto is interesting. They are saying it's a buy, the target price of 4,100. A solid margin beat on a positive mix. Volume recovery is the key here, according to them. They're saying margins are a key positive surprise, and I have to agree there. But they're saying it's primarily explained by the better mix, both in terms of higher export plus three-wheeler share and more profitable model mix, which is the Pulsar versus the entry segment in the domestic market. The dividend for FY22 was 140 rupees per share, which is about 81% payout ratio. Free cash flow was about 5,500 crores, implying a 5% free cash flow yield. And that's really impressive. So we all know these stocks add value. The fact that Bajaj Auto has managed to beat margin estimates so handsomely and post a near flat EBITDA margin should augur well. Won't be surprised if this is one of the large cap stocks of the day today. I may be wrong, but I think that this could be one of the large cap stocks of the day today. Then HUL, you have to admit that they actually did well on the EBITDA front, really. Revenues up 11%, EBITDA up 8%, and margins at 24% versus 24.5%. So they've done reasonably okay on the EBITDA margin front. Net profit up about 5% as well at 2,307 crores. The estimates were 2,373 crores. So while it's up 5%, it's lower than estimate. So optically, the numbers, mixed bag, maintain EBITDA. The problem for both HUL, and let me first actually give you the results here, right? So Credit Suisse has come out with a note on these numbers. They are saying they outperform. The target price has been cut to 2,550 from 2,800. They're saying home care saves the day. However, the BPC and the nutrition weakness continues to be concerning. They've cut the FY23-24 estimates by 9%. And gross margin continues to remain under pressure, but cost savings protected the EBITDA margins in Q4. Okay, let's take this plate off now. The point for HUL viewers is that both HUL and GCPL could be under a bit of stress because Indonesia has continued or reversed that decision of excluding some items, and all crude oil and edible oil, palm oil related products are under an export ban. This puts FMCG companies under pressure. There is a belief any which ways that staple companies, the real pressure will be felt in Q1, and there could be EBITDA margin contractions as well. So I won't be surprised, despite saving the face on the margins in Q1, in Q4, HUL might be under a bit of pressure today. So keep that at the back of your mind. On the large cap side, this is that one stock that could actually correct a little bit. Blockbuster numbers from Persistent Systems, really. We've seen all of mid-cap IT facing some stress here, some stress there. Look at Persistent's numbers, pristine. Revenues up 9.8%, EBITDA up 12%, margins expanded for Persistent Systems in Q3, net profit up 14%. You can't find a fault. The only problem with Persistent is that it is very expensively valued. However, we'll be talking to the management. I think that interaction comes to you at 10:30 today. I'll be asking them about what is their view on growth over the next 2 or 3 or 4 quarters, simply because for Persistent now, they need to persistently deliver growth for them to stay at these valuations. It is not a cheap stock. So be careful. The good part is if you are owning Persistent, it might not be a bad idea to stay there simply because they've done so well. The stock may well do well today, by the way, but be careful if you're trading it on the long side of fresh, because it is not cheap. Chennai Petro, strong numbers. Revenues up 88%, but 42%, excuse me. So strong numbers on the revenue side for Chennai Petro. EBITDA up 203%, margins at 7.53 versus 3.55. Net profit up 314% at 1,001 crores. Really strong show by Chennai Petro. And crude production volumes are very strong for that at 2.91 MT, 101% utilization. Reported GRMs rose sharply as well. And therefore, it puts Chennai Petro firmly in focus, despite the run-up that we've already seen in that stock. And it also puts stocks like MRPL into focus, because that stock could benefit as a result of this. So watch out for Chennai Petro, which is us saying that some of these petroleum stocks could be in focus. And the next stock in focus is the reason why media could be in focus, TV18. Bodhi Systems will raise and invest about 13,500 crores in Viacom 18. Reliance Projects will invest an additional 1,645 crores. And JioCinema OTT app will be transferred to Viacom 18. Now, Viacom 18 is the subsidiary of Television 18. This is big. Now, the problem with this announcement is that we don't quite know the exact valuations at which this deal has been done. It doesn't say that this 13,500 crore investment is for what percentage stake. It says that this will be a major shareholder now, but doesn't say it's a majority shareholder. So if you work with the permutations and combinations, that it will not be a majority shareholder, but be a major shareholder, which could be anywhere between 30 to 50% or northwards of 26%, let's say. But let's say the earlier reported numbers were about 40% stake. Then it leaves substantial upside for Television 18, the listed stock. And then therefore, all of the media related stocks come into play, because people will then try and attribute that if a news business come entertainment business in Television 18, a market leader by a distant margin, is valued at this much, can some of the others also get relative valuations? And that's why media becomes the sector of the day today, maybe for the next few days. But TV18 as a stock certainly could react in the positive today. So do watch out for this one as well. I will watch out for Indian hotels. Much as people love the reopening trade, the consolidated QOQ numbers don't look as great. Let's wait and watch if if there is some respite to Indian hotels commentary going ahead. So I think that is what everybody should be watching out for. Maybe the Omicron wave had something to do with this. And these are consolidated QOQ numbers, remember. So because October to December was a very strong quarter per se, QOQ will look weak, but decent numbers never, decent outlook should do the trick for Indian hotels. Let's wait and watch. For now, for example, if you're in Mumbai, you don't get a hotel room because of IPL and maybe some other things. You don't get a hotel room in Delhi because of events, is what mutual funds who want to do events tell me. So clearly, hotel business in the April to June quarter seems to be booming, and that is what you should keep in mind if you want to go out and short an Indian hotels today. Lastly, Trent, the numbers, revenue is very strong. It's a bit of a reopening trade playing out. Don't quite necessarily look at EBITDA margins. I think the notes that I read seem to be slightly constructive. So I don't have a view on what the stock could do today. And there are a clutch of other stocks which are there in focus. So maybe you want to focus on that. So viewers, keep in mind the stocks that you should keep in mind. Tata Motors, I don't have a confirmation on that, but Morgan Stanley notes suggest that they are the winners of an e-tender worth 5,450 buses. So Tata Motors in focus, Ruchi Soya, Adani Wilmar in focus because of the Indonesian decision on crude palm oil, as also HUL as well as Godrej Consumer Products. Reliance Group stocks and media in focus because of the TV18 deal. Macrotech, Motilal Oswal comes out with a note with the target price northwards of 1,500. Do watch out for that one. Car Trade, Nomura has initiated a coverage, a 20% upside. Watch out for that one. Chennai Petro and MRPL because of Chennai Petro's results. And as I said, HUL and GCPL, of course, because of the Indonesian decision. So a bunch of stocks. I've not even mentioned Bajaj Auto by virtue of the strong numbers that they've delivered. Could again be a stock in focus. So lots of stocks to focus on today. Stay bottom up. Don't quite look at trending moves necessarily, because this is not a trending market. It's a very, very range bound market. Thanks so much for tuning in. Have a safe day ahead.